introduction. Okay, it's 12:35. Everybody can hear me and see me? Yes? Wonderful. Let's start. Welcome, everyone, to the ARIA, Asian Real Estate Association of America, Greater Philadelphia, first Power Hour and our host and Go Corporate sponsor, Asian Bank. And we have fantastic chock full of information from Asian Bank. Our two speakers are Mr. Brian Frank and Ms. Sandra Su. And our co-host and co-moderator is Ms. Emily Chi Hui Huang. And she will be our co-moderator as well as our co-host. Welcome again for joining in this hour. It's gorgeous outside. If you had a chance to enjoy yourself, I guess you can call this Indian summer. And then after this, we will have this recorded and shared out through our membership and friends as well, and as also posted on YouTube for other people to share. And remember to share these resources to your friends, colleagues, and office colleagues as well. I would like to quickly introduce our speakers for today. Please hold your applause, and then we will have, in terms of our meeting, a quick surprise trivia questions for you. And the people who can answer them will have a chance to win free tickets to our next and last event celebration, which is on November the 8th, our Holiday and Awards Luncheon on November 8th. So that is something to look forward to. So remember, when I put the link into the trivia, please answer as quickly as you can, and I'll follow back to see who is the winner, lucky winner, okay? And to follow the program, Mr. Brian Frank and Ms. Sandra Su will give their quick presentation, but you're welcome, much more than welcome, to raise your hand or just virtual hand or real hand, and we'll ask you to unmute and ask your question, or you could just type it into chat. At this time, a quick housekeeping rules. Please keep yourself muted. However, when you unmute, make sure their phones are silenced or off. That way there won't be any disturbances for our guests as well as our speakers. We got that all right? Are you all ready? Yes. Yeah, I got a thumbs up from Scott. Awesome. Okay. Mr. Brian Frank is Director of Residential Mortgage from Asian Bank. He has been in the financial service business since graduating from St. Joseph University in 1989. He began his mortgage career in 1997 with Atlanta National Bank. He has been in the business for over 20 years. He worked for two major banks, Wells Fargo and Susquehanna Bank, the fifth largest non-lender bank, New Res as well, and Allied Mortgage Regional Mortgage Banker. He's also an in-house lender at Keller Williams' office, Huntington Valley Bank. So he's been around with lots of varied experiences. He also operated his own mortgage brokerage, Selected Mortgage Services, LLC. We love entrepreneurs. Throughout his career, he strived to create a double win for his clients and his referral partners. His guiding principles: he doesn't take clients down the path if he doesn't see the successful conclusion. In his business, the loan officer, according to him, has two roles: as an educator and as a matchmaker. Unfortunately, I want Mr. Brian Frank to give us a fun fact about himself because he did not include that in his introduction.
I'm sorry.
Frank, could you tell us a fun fact about yourself, please?
A fun fact?
Yes.
So I'm the father of two daughters who my wife and I had the honor of adopting them from China.
Wow.
And so my two young ladies have introduced my wife and I into the sport of rowing. And my oldest, who's a sophomore in college, freshman year, went to a seminar on learning to row, looked at me and said, "Dad, I want to do this." Well, that was 7 years ago. So I can honestly say any spring day from St. Patrick's Day to Memorial Day, if you're looking for me, I'm on the banks of the Schuylkill River cheering on one of my kids.
Ah, that's awesome. Well, thank you for that,
You're welcome.
Brian. Fun fact. And the next speaker is Sandra Su. She's a graduate of Southwest University of Finance and Economics, majoring in finance. She's also a graduate of the Hefei University of Technology. She majored in business administration. She has 10 years bank's working experience, and she works for Asian Bank for the last 6 years. She's also a residential loan officer since 2019, and she helped hundreds of clients and families get their mortgage. She also speaks English and Mandarin. Sandra, could you unmute and tell us a fun fact, please?
Oh, a fun fact. When you bring out the topic to Brian, I said, oh, I will be the next person to ask us a fun fact.
Yeah, something we like to hear about, but you personally.
So because Brian bring out of her 2 daughters things, that giving me a little bit idea, like maybe I can talk about my son. So I have a 11-year-old son. He's right now in the middle school age. So actually he is not as Brian's 2 daughters, not, they know what they want to do when they were quite at a younger age. My son, although he's like about 11 years old, but he is really like a still 5 or 6-year-old boy. So, like many other families, I actually schedule a lot of activities for him. And I hope he can enjoy, playing piano, go swimming. So that is most of the, Asian parents duty things. But I I recently realized that maybe that is not he wants really. So I encourage him to find what he really like. I hope that will be not too late because he's only 11 years old. And yeah, that is what I want to share with.
Thank you so much, Sandra.
Thank you
Remember, I don't want you to be snoozing here. I want you to be enjoying each other and being inactive in terms of being engaged. And we have these wonderful speakers who want to give wonderful information and educational resources for all of you. So right now, let's go to that trivia question. You have 2 minutes to quickly answer these questions very quickly, and then we'll see the results at the end. It's your chance to win free tickets to our last event celebrating our 1st year anniversary. Isn't it crazy? 1 year has passed by and gone, but we're gonna be celebrating with each other for this last event. Here you go. I posted the link on chat. Please open it. You have a couple minutes to answer, please. Oh, Mr. Brian, Miss Sandra, you cannot answer this. You can look at it, but don't answer it, please. Because I think you know the answers. You can look at it. 2 minutes, the clock will be on, starting now. Are you able to open them? I think Sandra cannot open. It must be blocked because maybe perhaps your work did not allow you to open a Gmail link. Is everybody able to do it? If you have a problem, please also put it on chat.
I think you can also try to copy and paste in your browser and see whether that works.
Okay, hold on. Who's able to answer it? If somebody's able to answer it, then they Somebody could not. Sometimes with this, some system do not let you answer it for some reason. So I apologize for that.
I can open mine. Let me see whether it's
Right. If you have a Gmail account, you can open. If you cannot, or you're working on your office corporate account, they block that.
I think Asian Bank blocked that.
Okay, 2 minutes up. Thank you for answering those questions. Let me see how many questions went through. Oh, this is interesting. We only got 4 questions in. Do anybody else able to give you some more time? Okay.
Rose, hi Rose. I joined in late. How's everybody?
Oh, good. How are you?
I'm good. So what are we filling out?
Oh, it's too late, Gloria. Early bird gets a special. So sorry. Can you mute yourself, please? I'm going to share the
Sure.
results to the
Okay.
survey or the trivia question really quickly. There's Gloria, president of ARIA New York East. Yay! Our sister chapter. Hello, Gloria. Okay, let me share a screen so you can quickly see this. Oh, we got 7. That's jumped in really quick. 8 now. Anybody more coming? Okay. Okay, I'm gonna share screen this one. Like I said, early birds gets a special. Okay, let me share screen. Sorry, Brian, I'm gonna share screen. You're gonna be share screen a little bit later on. So let's look quickly at the numbers. We have 8. Can everybody see my screen? We have 8 responses. What's an MDI? And we have higher tied at money deposit instrument, and red is money deposit instrument and market depository institutions. Sorry. Okay, and then 25 at minority depository institution. And guess what the correct answer is?
C.
Sandra, of course you know. I just told it myself. It is minority depository institution, which is Asian bank. That's something that I learned. So amazing. And the second question, what is the largest community bank in the US? 100% Asian bank. Everybody got it wrong. It's actually the State Bank of Texas. I guess everything is bigger in Texas. Okay, actually Asian Bank is a mid-sized bank and they rank 6 in that category, over 300 million. All right.
Not bad.
Not bad, right? When
Not
was
bad.
Asian Bank founded? And you had tied at green 1975 and orange at 1985. The answer is
1999. 1999.
1999. 25% of you got it right. This is a true-false question. I love these. The answer is true. The difference between a community bank and a regular bank. I had to Google this actually. And the fact that the answer is so interesting, right? That is local and that depositors live there and they invest in that community. That's the huge difference. Mm-hmm. And another question is the last one. What do you do to all that apply? Yay, most of us are real estate agents. Yay, investors, buyer, and other. I wonder what the other is. Okay, that ends it, and I'll follow up who's the winner for this, and you will get a free ticket. I'll stop sharing. Good job, everyone. I'll follow up to see who's the winner afterwards. All right, so at this time, I would like to hand this over to our presenters. Please help me in welcoming Mr. Brian Frank and Miss Sandra Sue. Take it away.
Okay, well, good afternoon, everybody. The trivia question was perfect, Rose. It was a nice little segue into a little background on who Asia Bank is, which was great. As we all know, and I'm not going to take away my first paragraph because you covered it all in your little trivia question there. But before I get into it, I wanted to just share with everybody what Asian Bank's mission statement is and who we are. As you all know, the bank's been around since 1999. And our goal as a bank is to offer our customers a ever widening range of personal and commercial financial products. And at the same time, we strive to provide you, our customers, a quality service unsurpassed by other banks. Over time, our partnership will benefit you, the community, and the bank. So what we're doing, I'm sorry, Tina, I'll fix my camera, I'll stand still, is we work to take care of the community. Because one of the things that Tina, that in the trivia brought up was that we are a minority deposit institution. And what that means is that our shareholders, there's greater than 51% of our shareholders are in a minority classification. That's how we get that designation. We're also a community development financial institution, which is a designation that we get from the US government that promotes access to capital to the local economy to help the underprivileged communities in the urban and rural areas of the country. And what happens when we do that is it gives us an opportunity to provide a little more, we'll take on more risks than some of the larger institutions, just because we're in the community and we understand our surroundings maybe a little more intimately than the local, than the bigger regional banks. Rose, do I need to reshare my presentation, or does everybody see that? Because all I see is my big bald head. I can't hear you.
I'm sorry. I said go ahead and share your screen. I kicked you
Oh,
out.
I have to do it again. Okay, I'm sorry. This will be better. You won't see my head, and as my hair falls out as I
I'm
talk.
actually spotlighting you. The camera's on you.
Okay, so I look pretty good.
Yeah, you look pretty good.
All right. So then share. Thanks, Sandra. How's that?
It's all right.
Is it? Okay, great. So once again, I just want to introduce myself. My name is Brian Frank, and Sandra Shu and I are co-moderators for this event today. And what we wanted to do is just introduce ourselves to some of you that we haven't had the privilege of meeting in person, and really just give you an understanding of what we're doing on the residential lending side. We are going to cover off a little bit about who Asia Bank is and what we provide and where we're located. And then we're going to get into a little more of the residential part of the presentation. All right, why isn't this down arrow? Hold on. All right, Rose, why isn't it changing? My shared screen. Okay, hold on, guys.
Right arrow.
Yeah, I'm trying. Let me try this again. Sorry, guys.
No worries. If you can, I can jump in and share my screen.
Okay.
There you go.
You guys
got
see it?
Yes.
You know the stuff on the side, do you, Rose?
I see it on the side. You can put it on the slideshow.
Let me try that.
There you go.
Okay. Okay. Let's see. Oh, look at that technology. It works when you press the right button.
That's right.
So let's get back to it. Asian Bank. We've been we're located here in Chinatown. We have a branch at 9th and Arch Street. We are a local community bank. We have currently 2 operating branches. We have one in the Northeast on Cottman Avenue, and we also have our branch here in Chinatown. And we're in the process of completing the build out of our 3rd branch down in South Philadelphia. It's going to be on the corner of 7th and Passyunk Avenue. So we're very excited as the use of the retail branch in today's society. Not as many people seem to go to the branches. Our customer base uses the branches a lot. So we see a need for additional coverage down in the South Philadelphia area. And as a company, we're very excited for this opportunity. Asia Bank is a full service community bank. We offer traditional banking, checking and savings accounts, money markets, CDs for the consumer. We also offer residential lending products, and we have a full commercial lending division. Our commercial lending areas concentrate predominantly on real estate, multifamilies, mixed use, some construction building, some working capital opportunities. As we all know, every case is unique. So, you know, if you have an opportunity that you think that needs some financing, we welcome the opportunity to have the conversation and see if it's a fit for our lending profile. What Sandra and I wanted to talk a little bit about today is the current real estate market, and especially residential real estate market. We all know, and the realtors on the slide presentation today understands how challenging this market is, especially for buyers. The inventories are low. A lot of people that would like to move are staying in their current homes because they have interest rates that are, you know, half of what they are today, meaning they've got 2%, 3%, 4% rates, and their buying power has been reduced because now rates are, depending on what you're getting, are in the 7s, sometimes 8. And, you know, doubling the interest rate can have a major impact on a consumer's buying power. But the people that are buying out there, it's amazing, I have to say. We've experienced buyers that are offering aggressive offers, you know, $20, $30, $50, $100,000 over asking because they desperately want to get into a home. I'm sure you've all have held open houses for your sellers, and there's a parade of cars coming up the street because everybody wants to get into the properties. It's interesting. A neighbor of ours listed their house on a Thursday, was under contract by Monday, but over the weekend they had to plow through with their real estate partner almost 11 offers and decipher what made one offer stronger than the next. And at the end of the day, their final price, final price, they were $60,000 over what they started. It's incredible. But with this interest rate market, we're already seeing people are starting to slow down. You know, but houses are not selling overnight like they were. Some are, but there's still some that should sell, but they're just not moving as quickly. So I think it's going to be challenging from what I've read, and Rose and I discussed this earlier. You know, the interest rate market is going to probably stay high for a bit, but it'll come back. Like as you guys said, I've been doing this since 1997. My first interest rate that I sold buyers was, I was offering you 10%, and I was charging you 3 discount points to get it. And they thanked me because the house that they were selling, when they bought that 10 years prior, they were paying 15%. So, you know, and I can tell you back in 2009, when people would say rates are going to go into the fours, and I was talking to customers, and I said, I've been doing this a long time. I can't imagine the rate would dip that low. And I was wrong, pleasantly surprised. But now the market, the interest rate market's totally swung in a different direction. But it'll come back. You know, realistically speaking, if you follow the 10-year Treasury bond, that's always been our governor, and I'm sure you've seen the headlines that it's creeped up close to 5%. Well, back when the market was at 2 or 3, or the rates were at 2 or 3, the Treasury bond was below 1. So typically, if you look at the yield on the Treasury bond today, I think it was at 4.8. typically an interest 30-year fixed mortgage rate is about 1.5% higher. So rates should typically be in the sixes right now, you know, but for some reason they've thrown that equation out of the market, thrown it out of the factory, and now the numbers are higher. They just have bigger spreads, and that's why we're in this marketplace. But it'll get better, and a lot of you have been through it before, and you'll know it'll get better. But in this marketplace, we're noticing there's plenty of buyers that, you know, want to do something but haven't had the opportunity. And you know, I've spoken to several real estate professionals, and they're saying, you know, buyers that are coming in with little down payment, or, you know, they're not as welcome to the table as often, just because there's other offers coming in with higher down payments. And, you know, that just shows that the potential buyer is more committed, or they have the assets to be more committed. A lot of people have walked away, have turned away from FHA borrowers. And I understand that, because, you know, an FHA appraisal can turn a whole deal upside down if there's things that need to be repaired to make it compliant with FHA. But I think where Sandra and I are really seeing an impact with what we're offering is working with self-employed borrowers, help people in the real estate investment space. We've had a lot of success with people that they're a permanent resident or they're a non-permanent resident. Some of the traditional, the conventional Fannie Freddie loans, if you don't have a social security number and any credit, they're not going to talk to you. Or if you don't document enough income on your tax return, they necessarily don't have a home for you to qualify. They don't have a loan to help you qualify to get a new home. But we've identified investors that can help us help you get these people into the real estate market again. And what I mean is we've had investors in there that understand the self-employed borrower. And, we work with, I've been with Asian banks since May, and I would say 75 to 80% of our borrowers that we work with on a daily basis are self-employed. And their accountants are very good at what they do. They utilize the tax laws to reduce their taxable income. And what that creates is a challenge for that borrower to get a loan through the traditional channels, going to a loan and getting a loan that's going to be insured by Fannie Mae or Freddie Mac or FHA. They just, they're going to look at your adjusted gross income, and if it doesn't help you qualify from a debt coverage from your debt to income ratio, unfortunately, you're not going to qualify. But we've identified opportunities there for the self-employed borrower, and there's several types of them. There's a self-employed borrower that runs a business and doesn't show a lot of income. We have 1099 employees that make a great gross income, but they expense it out to zero and they don't qualify. The real estate investor that takes his rents and expenses it down to zero, so his income doesn't qualify. So what we're able to do is take that self-employed borrower, and for those that have been in the business a long time, you'll understand where I'm going with this is we have the ability to use their bank statements, their business bank statements, and identify what their deposits are, just like they did years ago. There's an expense ratio that goes into the equation. What we would do is take an average of the person's deposits going into a business. We could then take our expense ratio, reduce that income, or reduce that average number, and use that as their income. So for example, we're closing a loan this week where the borrower showed $5,000 a month on their tax return as their average income. The woman owned a restaurant and she owned it 100%. We were able to use her business bank statements, and we increased her income that we could use for this transaction. We took it from a $5,000 a month to $13,000 a month. And you look at that and say, well, what does that do? It takes the person's buying power from, she can handle a payment of, if she has no other debts, from $5,000 on a $5,000 income of $2,500, she now can cover, her debt ratio can cover up to almost $6,500 in principal, interest, taxes, and insurance and other expenses. But it expands her buying power. Initially, we were talking about looking at a $200,000 house, which would have, you know, she wanted to get into a better school district for her family, for her kids, because she didn't want her kids to go to the high school that they currently would go to. And, you know, we were able to do that. We were able to take her bank statements and qualify her based on an average of 12 months business income. And she's closing, she's got a solid loan, she's over the moon, because her goal was, I want to get my kids into Haverford Township school system because I don't want them to go to Upper Darby High School. That was her goal. And prior to us finding these investors, we wouldn't have been able to help her. So that's a really big success story that we've been seeing. And since then, we've probably written pre-approvals for another half a dozen borrowers that are going to use the same program to help them go out and find a house. And they were ecstatic. And because now they went from, from a situation where they couldn't do anything to now they have buying power, and it's documented buying power. And I think that's something that some of the major banks out there that we all work with don't entertain that. And the reason they don't have to entertain it is because they're so big and they don't have to. But as a community bank, one of our goals is to provide a service to the community, to the people in the community. And I can tell you right now, we're going to be doing a lot more of these loans as the market gets better. I just know it because they see it, and they understand how hard it is right now. So that was an interesting success story. And the other interesting success story in the same customer is she had non-permanent residency. She had she's not a citizen. She didn't have a green card, but she had residency. She's been a non-permanent resident. She's been here since 2010, owns a restaurant, pays her taxes, has a social security number, everything else, but she didn't have the green card. She had her employment authorization card. And this is where it's so interesting. The card was getting ready to expire. She applied for a new one to make sure it stayed current. The process took so long that the immigration people sent her a letter and said, we got your application, your status isn't going to change. You're still able to move forward. And we were able to use that to help her help her continue on with the process to buy the house. So it was we had some hurdles to get over, but we got through them, and it was exciting. But we've also been along the self-employed people is the person that receives the 1099. There's plenty of gig workers out there, IT consultants that don't necessarily work for a company. They work for themselves, or they get a 1099. Those people, when their accountants get their hands on their taxes, they might have made $100,000 last year, but they whittle it down to 30, and rightfully so, because they want to reduce their taxable income so they not getting clobbered with income tax. The nice thing is, in that instance, I'll take your 1099 and create income out of that. It's really just, it takes me back to the earlier 2004 to 2007, but in a good way. It's more controlled. For those that were in the business back then, there's more controls in place. So they're not giving a stated income loan to someone who makes $1,000 a month and put on there they make 10,000. That's not happening anymore. All of these people that we work with, we're confirming that they file taxes with a letter from their accountant stating that they're self-employed and that they say who they are and their business is what they do. And we confirm that the tax preparer has physically worked for them. You just can't pick up someone from H&R Block saying, yeah, I've known Brian for 2 years and he runs his own business. These people have to document that they've been working with him. So, what this does for us in the market is it helps us potentially open up your prospecting books and look at the self-employed borrower who may not have been your A1 candidate, your A1 buyer. It opens up the opportunity to say, hey, let's take a look at them again. Why don't we talk to Asian Bank or have them talk to Asian Bank, and let's see if there's an opportunity to put another buyer in your Rolodex so that you can help them, find that investment property, find a new home. Because one of the things Sandra and I, strive to do is we do all the legwork up front. I'm going to take your income. If it's a bank statement or a 1099 or a profit and loss statement, I'm taking it, and my investor and I are sitting down and we're qualifying the income. It's the income's underwritten before the file, before I say go buy a house. Because let's face it, I put gas in my car the other day and it was $3.95 a gallon. But the realtor's time is more valuable than a gallon of gas. So I want to make sure that when you get a pre-approval from us, they're going to financially qualify, because that's a big deal. The other area in residencies, we have an investor that's going to help us with people who don't have Social Security numbers. They have an ITIN number. This allows, the interesting part is they don't have any Social Security, but they have an ITIN number, and we can document income. We can help them buy a home. And if they're self-employed, we can use similar self-employed tools to help qualify them for income. We have a customer we're working with who, same thing, has an ITIN, doesn't show any income. We looked at her bank statements, and lo and behold, her average deposit's around $9,000 a month. We do our expense ratio. All of a sudden, she went from no money every month to $4,500. That opens up, there's a buyer right there. So we really, I'm going to say we understand the self-employed person. We understand the immigrant community, and we help educate them. Because in my bio that Rose read, I always chuckle. I say, as a loan officer, you have two roles. You're a teacher or an educator, and you're a matchmaker. The goal here is for us to educate you and your borrowers on the process of buying a house. We educate you on how we're going to qualify you. We put a structured loan together, and you agree to it. We submit it to underwriting. We get the deal done. We get the loan approved, so that when we go to closing, basically it's an exercise of signature, because everything going through the process. The other piece about it as a matchmaker is we want to make sure you know what you're getting involved in, because as soon as you close on that loan, that's a match. There's a marriage right there. You're going to owe that back. You're going to pay that loan back. If it's over 20 years or 30 years, whatever it is, you have that loan until if rates come down, we refinance you or you pay it off. But the main thing is we never want to hear someone say, well, I got this loan. Well, what does it do? I don't really know. What's this piece? I want to educate you. I have to put my head on the pillow at night and make sure that I did my job right and everyone is understands what's going on, because it's a big deal. There's so much time, emotion, and financial pieces of people's time that's involved in this, meaning the buyer gets excited, they provide everything to us. I want to make sure they understand how we're going to get them to the end game, and we'll get into the end game. And at the same time, I don't want you guys to go out and show people houses if they're not going to work. It's not going to qualify. That's not fair to you guys. Your time's too valuable. But it's interesting. The market's getting better because we're finding that things are starting to slowly open up. First-time homebuyer programs have been around quite a while, as we've all been using them. There's down payment assistance programs through the counties that we participate in and help people get into. A new one that's coming down the pike is FHA is doing a program for 100% financing. Now, they're putting, it's the first mortgage of, 96.5% down, but then that 3.5%, there's a program coming out that's going to allow us to finance that. And that could be, let's face it, scraping together down payment money and closing costs is quite a challenge. It's not the days of, I need 30 grand to get into a home. It's a lot more because the numbers have gotten bigger. So that's an interesting tool. And as soon as I get more information on it, I'll share it with the team, so everybody knows what's out there, because there's plenty of people that want to buy a house, but they don't, down payment and closing costs is just an equation that they can't handle. So if this could help us get people into the houses. The other piece that I needed to touch on, and I skipped it on the last slide, but I'll touch on here, is Fannie Mae is done away with their loan level price adjustments on 2 to 4 family unit properties. Typically, if it's a primary residence and you're going to buy a triplex, live on the downstairs and rent the 2 upstairs units, once you went over 1 unit, they restricted your loan to value to 75%. Coming in November, they're going to permit primary residences, single family up to 4-unit property. If the person's going to live there, you can put as little down as 5%. That's a big deal, because there's a lot of people that want to get into the real estate market, but they want an investment. They want to start there, move in, live there, fix the other units up, rent them out, and then all of a sudden they have an asset that's working for them. The beauty of this program is coming in November 17th, we only need 5% to get you in the door. And that opens up a lot of opportunities. I think this is an enormous opportunity, especially in the community. The Asian community loves investment properties. They look at them all the time. Now, the 5% down is only on if you're going to live there. We realize that. But for the other person that wants to buy an investment property, a single family, 1 to 4 unit properties, we've found an investor that's going to allow us to use the rents for the area, what's called a debt service coverage ratio, a DSCR loan, which will allow you to basically qualify on buying the house based on the rents in the area to qualify income-wise, which is nice because it allows you to qualify based on, you buy the house and your mortgage payment's $1,000. And when we do the appraisal, we get a real estate, a rental investigation done, or that's an addendum to the appraisal contract. And it'll tell you what the average rents are in the neighborhood. And as long as that ratio of principal and interest versus rents, there's a 1-to-1 ratio, or the rent's covers a little bit more, or even a little bit less, we'll get that loan done for you. So even if your principal, your payment is $1,000 and your rent's coverage for the area is only $800, that's only a 20% deficit. There's lenders that'll take that loan, which is great, because I don't then need to go into an investor's tax return. And if he has multiple units or multiple investment properties, who knows what the tax return is going to look like? It's going to look like and say, I don't qualify. But if I can have my one property stand on its own, I mean, that's a big win. That helps us out a lot. And it just takes the paperwork from a monster stack to a loan application, which is really interesting. And that's an underwriting concept that's done constantly on the commercial side of the lending world, and it's coming into the residential area. So that's really exciting. Does anybody have any questions at this point as we're going along? I know I've been chatting here for a few minutes. I was waiting for someone to say, hey, Brian, how about this? Any
Amelia, are you available to take over the Q&A, please?
Yes, there are some questions.
Oh, great.
I think some of them already answered. There are, the question is, do you serve in New Jersey? And then I think Tina already answered that, yes, you serve in New Jersey, PA, and Delaware. The additional question is, other than this state, do you serve the other states in the United States?
So we are a state chartered bank, and technically we can lend all over the US, but our philosophy is that we want to stay in the community that we work with. So when I say community, I mean we'll lend in Pennsylvania, state of New Jersey, Delaware, maybe we'll touch into Maryland, maybe we'll stay in the mid-Atlantic area. I know the commercial business has done some lending in New York State, but we kind of want to stay in our footprint per se, just because we understand the market. But if there's a one-off, we're always welcome to look at it, and if the deal makes sense, we could potentially make an exception.
Okay, great, thank you. And you have the related or like a roster for appraisers wherever you serve, and then you can have a roster of appraisers to contact them in order to appraise the property that the borrower is borrowing, right? Correct.
So because of oh well, Emily, you're gonna ask me a tough one here. Back in 2010, prior to 2010, we used to be able, as you remember, the lender could order an appraisal through anybody. I could call Steve, the appraiser, or any of the two appraisers that are on today, and say, hey, I have a property at 123 Main Street in Plymouth Meeting. Would you go appraise it? Well, after the mortgage meltdown and Dodd-Frank, that created a whole new industry of what's called appraisal management companies, and started an industry. So what happens is what we do is when we order an appraisal, I submit it to our appraisal management company, and they have a network of appraisers that'll go and handle something in Atlantic County, for example, or if they're in Lower Delaware, they'll go down to Kent or Sussex County. They'll find us a person down there and handle it. But yes, we do have coverage when it comes to real estate appraisers.
Okay, thank you. And then for part of the areas, 3-point plan is we want to build equality and then justice to all the communities especially the AHPI community. So when you order the appraisals, and then if there's a need for like the specific community, like there's the Asian families, and then for the times of communication, do you consider that fact when you order the appraisal?
When we order an appraisal, we put it out to the management company, and that's as far as as I, as a lender, get involved. I have no ability to steer it towards one appraiser versus the other. We put notes on the file and say if there's a special situation, and then they'll try to facilitate whatever they can to accommodate our borrowers.
Great. Thank you. Thank you. The next question, I'll give you a break, Brian. Thank
Thanks.
you.
Let me take a drink of water.
Thanks. The next question I will ask Sandra. I think Sandra already answered part of that. That is YY. She asked, what's your down payment and credit score requirement? Sandra already answered that different programs have different requests for the down payment and credit score. So she asked to give her a call. So Sandra, can you expand your answer, please, if you could?
Yeah, because you know, people have different needs. They maybe need commercial loans, they maybe need residential loans, and even because I'm a residential loan officer, so I particularly can talk about the residential down payment and the credit score requirements. So as Brian mentioned, that we provide a wide range of products, including the qualified loans and the non-qualified loans. So we can offer, you know, different. We have different requirements for specific programs. So normally, you know, like conventional loans, people can put 5% down, but sometimes we have, you know, promotion that they can put as 1% down, for example. So normally the FHA loans may require at least the 3.5 down payment, and maybe we have heard about the Fannie Mae, Freddie Mae. We changed that requirements to put they are allowed to put 0% down. So that's why I answer questions in this general. And also we have some non-qualified loans that maybe require a little bit more down payment, like 20 or 25%. It depends on the borrower's you know, the borrower's credit score and the loan to value. I hope I answered the questions.
Thank you. Thank you. The other question is for people that, for the audience here that you don't know about the ARIA 3-point plan. Every year, ARIA will go to DC, Washington, DC to promote our 3-point plan, and some of the members director already been there. For the credit access. So ARIA has been working for a long time to advocate for expanding credit access, and there have been 2 recent victories in the area. So Freddie Mac and Fannie Mae announced the program to help renters build credit by reporting on-time payment history, utility payments, and other factors. So then furthermore, the FHFA approved the usage of the fiscal 10T and the Vantage Score 4.0 by the GSEs, creating a more comprehensive credit model that allows more AAHPIs with STEAM credit files to qualify for loans. So in your practice, Sandra and Brian, have you ever encountered this kind of instance where some clients that you already helped them using the other credit equivalent documents to qualify the clients if their credit score is not that high enough, or you can use the renters or other documents to prove their loan?
Okay. So what we've been able to do is first of all, with our FHA loans, we can lend people money down to a 550 credit score. So that helps a lot of people. But the real challenge is for the consumer that doesn't have credit, or they're renting, but they are paying cash. And you know, typically, if you're using you're in an apartment complex and there's a management company, they'll hang on, Sandra, mute your phone. Sorry, we're in the same office, so it's echoing. I'm hearing myself, and I'm saying, God, I sound terrible. But what happens is the if you live in an apartment complex, or your rental properties managed by a property management firm, they'll be able to document your payment history. Now, I don't know, Emily, if that law that you mentioned that's going into effect is requiring everybody to, every property management company to report rental payment history. I haven't seen that yet. But typically they are able to provide us a verification of rents, and we can use that. We also find people that have thin credit history. They can provide us alternative payment history, meaning if they have a cell phone bill, if they have a car loan through a company that's not reporting, if they can get us transaction history that they're making their payments, we can use that and submit that to the lender as alternative credit to help build a credit profile for that individual. I know that Vantage score is in the works. I don't think I haven't seen it been put into practice yet, but we know it's coming, and I'm sure the investors are all adopted as it gets put more into the common practices of credit evaluation.
Great, thank you. I have, before we go to the next one, I see there are a few members who raised their hand. James, can you please?
Okay, I don't know if you can hear
Thank
me.
you, James. Sorry for your
I
waiting.
can hear you, Jim.
Okay, the question is that for commercial stuff, you have to use an environmental company to do a phase one. And there's a wide variation in pricing. So now I noticed that the lender, I just did one, the lender would tell us which company they're willing to use, and it's more expensive than many others. I mean, does Asian Bank care about which environmental company can the customer choose, or do you stipulate that?
I can take that, Brian.
James, thank you.
Yeah. Hi, everyone. Sorry, I'm a little late to the call. Was caught up in another meeting. Jim, so typically, what like on the commercial side, so we have a list of both approved appraisers and a list of approved environmental engineering companies, and we're always looking for good partners. So any kind of recommendations that borrowers may have, and we learn about them along the way. I'm very happy to add them to our list. But to do that, there is a process that we do have to go through a certain approval process, and by policy, we have to use one of those entities that is on an approved list. And the reason we keep adding is that, like very much like you said, we want to be able to find options, the cheaper options for the client, but at the same time, making sure whatever report is being done or remediation needs to be performed, is done by a company that we know, having done due diligence on, and also are comfortable with. So typically, we like to find, get their due diligence package, maybe talk to one or two their other existing relationship, and just to learn a little bit about them. So if you have somebody that you think is a good fit, happy to, take their name. If you wouldn't mind sharing, be more than happy to add them to our list. So that next time, we have a situation come up, whether it's your client or somebody else's, be able to reach out to them and say, hey, we have a job here. What do you guys think as far as cost and turnaround time?
Great, thank you, James. So
Yeah.
for everybody's reference, James Wang is the CEO, president of, and also the founder of Asian Bank. Thank you, James, for joining us. So there's next question is, maybe James might be the person to answer. Do you have a small business loan?
We do. We have a couple of different programs. So part of what makes community banking fun and interesting, for myself and for our lenders, is that each commercial or small business loan is kind of individually tailored to the client's needs. Meaning we don't have, unlike a conventional residential mortgage, right? You have to, be able to check off all of these boxes in order to do a deal. There's certain basic information that we do require, but once we have that, it's really up to us to see what we can do within our policy, and also up to our loan committee to be able to make a determination. So I would say not too small business loans are exactly the same, but we like to get to know the borrower, their business, their cash flow, and sometimes we pull in other sources if they were available. So we take a more of a holistic approach to these things, and I think our ability to work with as many borrowers and clients that we have over the last 25 or so years, I think through that experience, I think we built up a fairly good level of comfort in how we underwrite, and our clients have I think benefited as a result as well. But a bit more on the specific products. Obviously, term loans, equipment purchases, lines of credit, small business, SBA guarantee loans. We also have a what we call an SBBL product, which is for loans that are 100,000 or less, and that is typically for the truly, the small, very small businesses, and that is priced based on a matrix and depending on some of the criteria of the client. But I would say our most popular product is just our typical commercial small business loan, where we look at the individual's personal income, we look at their business income, we look at their investment property income, if any, we look at the collateral, and really get a sense of what they want to accomplish, and really do try to help them out and make it work for them. I hope that answers the questions, but if you have more specific questions, feel free to reach out or put them in the chat, and if we don't have time to get to them in today's session, be more than happy to respond via email as well.
Thank you, James. The other question to James too, I know that Tina sent the contact information for your commercial lender contact. So you do have a commercial lender in your bank that could cover the commercial loans. Can you be a little bit more specific? What kind of commercial loan that you cover? And then in terms of the dollar amount, how large you can lend the money?
Oh, sure. I mean, we can, we will go up as high as 15 million on projects that we like. Obviously, we don't typically go up to that limit. With a brand new client, typically it's somebody that's been with us. And I think what has worked out for us is that typically a client will come back to us over several projects, and then they kind of reach that limit. But we have funded projects that size and larger. So size for us, really is not an issue, but it's really about the relationship that we get to develop with a client. And our commercial loans range from, specifically on the real estate and CRE side, we do rehabs, we do purchases, investments, owner occupied, construction as well. Although, again, construction is one of those that we are looking more towards having built a relationship with a client, and then we will look at some of their construction projects.
Thank you. A quick reference: the building that the Asian Bank sees at 9th and then Arch Street, is that funded by your bank, or you connect them?
9th and Arch, no, that actually was a Parkway project, so we are just a renter in that project. We did not, but certainly, if you look at the landscape, of Chinatown, obviously our lending area covers, that and more, counties and states adjacent to Pennsylvania. We've done quite a few projects in Chinatown, so there are a number of buildings that we are. We've been part of, and if you are coming down the 95, you may see a big banner on there. That's a condo project that we financed. So that there's an example of a construction. I think we also have one closer to us on 11th Street as well. There's another that's more of an apartment. So that one's a multifamily and one's a condo. Both are construction, but it's two borrowers that we've have developed a relationship with the last several years. So we're very comfortable with how they build and their model and their ability to kind of get the property to income producing condition.
Thank you. Do you connect with developers, either foreign developers or local developers or regional developers, to some project that the Asian Bank is working on that you need absorb other funds in order to complete the program? If you have that kind of opportunities, you can feel free to share with us.
I'm sorry. What do you mean by? Are you saying?
Oh, the question is
if
there are any other bigger project, larger projects, like a development project in the city of Philadelphia or in the surrounding area that Asian Bank is involved, that that need more funding from other resources that you can. That if there's some other projects that you can share with us, and then we can share with our members, and then they can benefit from investing those kind of programs with their own funding. that if
Oh.
you want to absorb some personal funds or corporate funds. Yes.
Understood. Yeah. So time to time, clients or referrals sources would bring us projects where there may be a shortfall in or a gap in the capital stack, and obviously will look at it from a debt perspective, but sometimes like you identified, Emily, there may be opportunities for investors to kind of pitch in and then earn a return on their investment on as an equity shareholder of whatever particular project. So those things do come up from time to time. Be happy to pass those along when they do materialize, and obviously with the sponsor's consent as well, because sometimes they have their way of doing things, and they may or may not. So obviously we'll have to get their consent before we share some of these opportunities. But the event that they are, and we will be more than happy to pass those along. But I will say, though, knowing that there's an interest, I think that's one more thing that we can bring up to some of these sponsors and say, hey, we may have access to a pool of investors. Would you be interested in speaking with them? I think for them, it's a win-win, right? It reduces the leverage. They may give up a little bit of the project ownership, but typically in those structures, they're not too entirely concerned about owning a huge piece of the project, given some of how those things are structured. So there definitely could be possibilities.
Great. Thank you. Thank you so much, James. We'll go back to the questions.
No, actually,
Rose.
it's 1:40 already. We went over our time. We want to keep it short, so let's wrap up. So thank you very much, Emily, for moderating the quick Q&A, and thank you, President James Wang, for joining us and answering those questions as well. Mr. Brian Frank, could you share the last screen so that the contact slide will be available on video?
Yes, I'm sure. Let me try here. There we go.
There you go.
So I just want to thank the board of AREA and everyone that took time today to spend an hour with us. Sandra and I are available. Here's our email address and contact information. If you have a particular scenario that you'd like to talk to us about, we'd welcome the opportunity. We look forward to working with everybody as the membership grows. We learn more about your business practice and what each of you do and you specialize in, and where we can help at Asian Bank. But I want to thank everyone for their time.
Thank you. And I want to echo Brian's sentiments to also thank Asian Bank President James Wang, our speakers and presenter, Mr. Brian Frank, and Ms. Sandra Su, as well as our co-moderator, co-host, Ms. Emily Wang, and all of you, including the board members and presidents of our area sister chapter, both in New Jersey and New York East. This has been highly informative. We also have wonderful sister, also collaborators and partners from other associations as well, and also a very important person that I met from a regional board member or president of Miramar Real Estate as well, Mia Momo. So she came from afar to come and join us. So we have New Jersey, we have people in Pennsylvania and also from Miramar, and our treasurer Benjamin Wang is always driving and tuning in. So I appreciate that. We also have our Vice President Secretary Robert Couch, who's here, and also people from New Jersey, and our board director Yodi. So thank you everyone. Have a wonderful rest of your day and enjoy our Indian summer. And we'll follow up with this recording and also let you know who won our trivia questions to get the free tickets for November 8th. And Asian Bank will be there front and center as our gold corporate sponsors. So we will appreciate, and we will unveil their big banner, and we have photo op in front of that as well. So that's celebratory to celebrate our first year anniversary as AREA Greater Philadelphia chapter. So thank you everyone. Take care. Bye-bye.
Thank you.
Thank you, Rose,
Bye-bye.
Emily,
Thank you.
AREA board members. Thank
Thank
you for the
you, James,
partnership.
for coming.
Really appreciate it. Take care.
Thank you.
Bye-bye.
Bye-bye.